The International Monetary Fund cuts global growth forecast for this year to 2.8%, says the prospects for growth in the medium term look bleaker than before. Also trims India's growth forecast for FY24, taking it to 5.9%, sharply lower than the 6.5% projected by the RBI. A CNBC TV 18 poll suggests inflation eased to 5.63% in March on a high base and some softening in food prices. Industrial production in February, meanwhile, is seen growing at over 5%, similar to the numbers posted in January. And the Emergency Credit Guarantee Scheme launched at the start of the pandemic draws to a close. Nearly 3 lakh crore rupees were disbursed to small businesses. NPA ratio was at 4.38%, which the government says is better than expected. The Q4 earnings season kicks off with software giant TCS set to report numbers today. A CNBC TV 18 poll sees sequential constant currency revenue growth at 1%, easing supply pressures, better utilization and operational efficiencies are also likely to aid margin. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're looking at as we get into a brand new trading session. There's lots to talk about, but first up, let's go through what's happening across the global markets. We'll start off with Asia because there has been a bit of a slip that's come through in the past few minutes. Most of the Asian markets now seeing some cuts, but what's holding up, let me take you through that first, is the Nikkei market. That one is seeing gains of 140 points, 0.5% higher for the Japanese index. You also have Shanghai trading with just a minor positive uptick right now, just around 9 points in the green. But everything else for Asia is seeing some cuts. Kospi is down around 0.25%. But remember, of course, Kospi had a very good session yesterday as well. You have Taiwan, Straits, Hang Seng all trading with some cuts right now. Hang Seng is down around 90 points, like you can see. Taiwan seeing a cut of around 40 points. So not looking too good across the Asian markets. The SGX Nifty has also come off in the past few minutes. It's absolutely flat right now, just about managing to stay in the green, but it has lost around 25 points in just the past few minutes. So that's what's happening across the Asian markets. But let's also talk about the US now. Wall Street ended Tuesday's trading session mixed. So the Dow was up around 100 points. The S&P 500 absolutely flat, like you can see on your screen. And you have the Nasdaq Composite, which was down around 59 points at the end of the trading session. Now, the big cue to track is, of course, the March CPI inflation print, which does come out later today. You also have Fed minutes, which are going to be released later in the day. So those are some important cues that we're tracking. But speaking of Wall Street, here's some important opinion. This comes in on the equities outlook and the all-important CPI print that's expected later today. Listen in.
But let's posit a scenario that maybe there's 1 or 2 more hikes. The Goldman economists are expecting 2. Markets sort of expecting 1 plus. We have the debt ceiling. That is out there in, call it late July or August, sometime August, September, that period. That's a big risk. The divisiveness in Washington, D.C., obviously, highlighted every day what's happening there. And so that's a risk I would point to. Historically speaking, market tends to be weak around the head of the debt ceiling. Hopefully, eventually gets resolved. So that's be one observation. But if you look out over time, would expect that if the Fed is cutting rates over time, then equities tend to rally.
Tomorrow's number matters a lot. I think it will be down at least modestly. The more it's down, the more breathing room I think the Fed will have for its discussions and perhaps pausing in the May meeting. That's something that they haven't even gotten close to deciding yet, I'm sure. As much as they say, we're still concerned, they should be at least, about the condition of the banking industry overall. And you don't want to make that part of the industry even more vulnerable by raising rates unless you absolutely have to. And I understand that, and that's when some of my comments were about in terms of inflation has to be the first priority. They have to get it down, have to show it's continuing down, and then be confident of that before they really start thinking about pivoting. Pausing may be one thing, but pivoting, I think, would be way too soon.
I think we are getting very close to a place where the Fed is sufficiently restrictive. But I think now the big question that the Fed's wrestling with is how to think about the financial stresses and pressures that we've seen. And I think the acute phase of that is abating. But I think we've all got to put on our seatbelts and watch over the next, likely over the next several months, to see whether we get into a tightening credit environment that could be characterized as a full-blown credit crunch. I think that's the big question going forward that the Fed is going to be wrestling with in its upcoming meeting.
All right, that is some important opinion that we are tracking today. But let's now talk about all of the individual cues that you should track as we get into this trading session. We have our research team here to take you through the trade setup. Mangalam, Rima and Surbhi are all with us for exactly that. Guys, a very good morning to all of you. Rima, let me come to you first. Yesterday was a good session. And, today is so important, right, with a bunch of these cues lined up. Looks like an extremely flat start ahead of that.
Indeed, but all the cues are going to come post-market hours. So domestically, we'll be tracking the TCS earnings, which typically come out at about 4:30 p.m., followed by a presser at 5:30 p.m. The March CPI for India and the February IIP, again post-market hours at 5:30 p.m. In the US markets, the CPI inflation print, which you pointed out, is very, very important. That typically comes out at 6 p.m. India time, and plus you've got the Fed minutes. So today, while it's an important session for our markets, it's not that we have any cues to deal with today. So markets could continue to, amble along like they have been, but perhaps with a positive bias. The only thing we need to watch for is the market appears to be facing some fatigue, closer to that 17,750, perhaps 17,800. It's been flagged off by a few technical analysts as a bit of a resistance level. No big direction emerging from Wall Street overnight. Asia is mixed, as you pointed out. The good part is the FIs continue to be consistent buyers in the cash market. They're not buying big amounts, but they are nibbling in every single day for the last 8 consecutive days. And yesterday, the FIs bought 342 crore in the cash market. The DIIs net sold 264 crores. So the markets could continue to amble along, but post-market hours is when all the action begins. So tomorrow is going to be a key decisive session in my view. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues. Let's also talk about the individual stocks that you should watch in today's trading session. We have Surbhi standing by with that entire list. Hi, Surbhi.
Hi, good morning. Thanks for that. So result season officially begins. Delta Corp has announced its Q4 results. The revenue has seen a growth of 4% on a year-on-year basis. EBITDA is up 13% and the margins have come in at 26.5% versus 32% same time last year. Sula Vineyards has reported its Q4 sales updates. The own brand sales has seen a revenue growth of 15% and wine tourism business has seen a revenue growth of 18% on a year-on-year basis. BHEL and Titagarh Wagons Consortium has received an order to supply 80 Vande Bharat trains at a cost of 120 crores per train. Sanofi India, the National Pharmaceutical Pricing Authority, has fixed a ceiling price for its insulin brand. The product will be subject to a price reduction of approximately 21%. Now, the company says that this will impact the sales but does not see impacting their profitability. And lastly, Paras Defense, the subsidiary Paras Anti-Drone Tech has entered into an MOU with Space Kava Explorations. This MOU is signed for indigenous development and deployment of space applications.
All right, Surbhi, thanks a lot for taking us through that entire list of stocks. We will watch for all of these. Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Mangalam, like Rima was pointing out, the FI buying has continued once more.
The FI buying has continued for 8 days in a row, and the important part is that as a result of which the Nifty's rally has continued for 7 days in a row as well. The Nifty gained for 7 straight sessions. The FI has bought for 8 straight sessions. In fact, they bought almost 6,000 crores in last 8 sessions itself. But the bigger delta came in index futures, where the FIs have consistently bought. In fact, yesterday as well, they bought about 2,200 odd crores, and that's not buying as much as covering their short positions. 17,800 short contracts covered. Remember, at the start of the series, the FI's short exposure was 91%, long exposure was 9%, the lowest ever at the start of the series. And in just the last 4 trading sessions, they've covered 62,000 short contracts and added almost 18,000 longs. What does that do to their long exposure? At the start of the week, it was close to around 12%, and now it's moved higher all the way up to 28%. Not just that, they're also covering short calls that they've written. So yesterday, we saw short call covering of close to around 57,000 contracts, and they wrote 151,000 puts. That's telling you that there is strong support support at the lower level as well. Where did we see short covering of calls? 17,600 and 17,650 call writers were stuck on the wrong side. They had to unwind their positions. And we saw 17,700 put writers get active as the market closed past that 17,700 mark. So all of them are now eyeing 17,650 as an important support. However, also as we moved higher, just keep an eye out on a couple of factors. The put call ratio is closer to 1.2, which is closer to the overbought sort of zone. Secondly, we may run the risk of running into resistances at the 100-day moving average for both the Nifty as well as the Nifty Bank, a couple of 100 points away for the Nifty right now. And the index to watch out for today will be the mid-cap index, and that's primarily on account of the weekly options expiry of that index today. And finally, one stock I'll be keeping an eye out on is Delta Corp, enters F&O ban. This after the company posted a soft performance in their fourth quarter yesterday post-market.
All right, Mangalam, thanks a lot for running us through all of those cues. That's everything that you should watch before we get into this trading session. With that, another important story that we also want to bring you, the International Monetary Fund has trimmed its global growth forecast and also slashed the GDP outlook for India, warning of high uncertainty and a larger risk of a hard landing, especially for developed economies. Now, while it has cut India's growth forecast sharply in its latest World Economic Outlook report, so this is down to 5.9% for this year, it sees global growth bottoming at 2.8%. This is for 2023, before seeing a modest recovery in the next year, so in 2024. Ritu Singh is here with all of the highlights from this report. Ritu.
The IMF has handed a sharp cut to India's growth forecast in its latest World Economic Outlook report, both for the current and the next fiscal. For FY24, IMF has forecast India's growth rate at 5.9%, which is 20 basis points lower compared to the January forecast and much lower than RBI's estimate of 6.5%. Thereafter, India's growth is seen picking up to 6.3% in FY25, but this too is about 50 basis points lower compared to the previous forecast. The fund estimates that India's inflation is going to average 4.9% in this fiscal and 4.4% in the next, which is a tad more optimistic than RBI's projections. On the global front, IMF says prospects for growth now seem dimmer than in decades, and any tentative signs in early this year that the world economy could achieve a soft landing have receded amid stubbornly high inflation and the recent financial sector turmoil. IMF's baseline forecast, which assumes that the financial sector stresses are contained, is for global growth to fall from 3.4% last year to 2.8% this year before rising slowly and settling at 3% 5 years out, which is the lowest medium-term forecast in decades. In fact, the risk of global growth falling below 2% this year, a low growth outcome which has only happened 5 times since 1970, remains elevated at about 25% chances. Now, IMF warns uncertainty is high and a hard landing, especially for advanced economies, has become a much larger risk. Many economies are likely to experience slower growth in incomes this year, and the world economy is not currently expected to return over the medium term to the rate of growth which prevailed before the pandemic. A quick word on inflation as well, which is high but starting to decline. The baseline forecast is for global headline inflation to fall from 8.7% last year to 7% this year and 4.9% by 2024.
All right, Ritu, thanks a lot for taking us through all of the highlights of IMF's latest report on the global growth picture as well as on India's cut as well. But with that, it is time for our first short break on the show. When we come back, earnings season kickstarts today with IT heavyweight TCS all set to report numbers post-market hours. We'll get you a preview when we come back. Welcome back. You're still tuned into Power Breakfast. Now, fourth quarter earnings season begins today with IT bellwether TCS due to report its quarter 4 earnings later today. So, Rima is joining us with the key expectations. Rima, it's going to be a lot about IT in the coming few days, but tell us what to expect from TCS today.
Well, TCS, according to the consensus expectation, is likely to report a 1.9% dollar revenue growth on a quarter-on-quarter basis. We also look at the constant currency revenue growth, and that is anticipated to be about 1%. But this time, given the macro uncertainty, the estimates are all over the place. So for the constant currency revenue growth, there are some analysts who are expecting a flat growth, just up 0.1%. But there are a few who are going up to a 1.7% revenue growth in constant currency terms. So it's quite a wide range this time. But what you need to know is that this year's growth will be lower than last quarter's growth. EBIT margins are likely to expand for TCS by 50 basis points to 25%, given the fact that the supply side is now rationalized, and this will drive a profit jump of 6.5%. Now, what will you watch very closely? Now, TCS has a very high exposure to BFSI at over 30% of its revenues. So, has there been any impact of the global, banking turmoil, US regional banks, European banks on the deal pipeline in terms of revenue conversions or revenues per se? And what about deal flows? If US is going into a recession, can we continue to see deals within their company's guided band of $7 to $9 billion? This quarter, the deal wins have been pretty robust. In fact, they announced one of their very large deals of £600 million with a UK insurance company. But the outlook on deal wins will be tracked very closely. And plus, TCS has a new CEO designate. He will officially, take charge once Rajesh steps down in September. But priorities under him will be also watched very closely. And he will be chatting with CNBC. He'll be, I'm presuming, there at the press conference today, and he will be chatting with CNBC tomorrow. So we will get the strategic direction of TCS in an uncertain environment. Back to you.
All right, all important to watch. Rima, thanks a lot for that. Remember, you can also catch Rajesh Gopinathan, MD and CEO of TCS, as well as the entire team addressing the media at 5:30 p.m. After their earnings release today. All right, with that, let's also move on and bring you an exclusive conversation now. My colleague Shivani spoke with KM Birla, chairman of Aditya Birla Group, on the sidelines of the IMA Awards and began by asking him how he really sees India positioned amidst this big global uncertainty that we've all been talking about and the outlook for FY24. Listen in.
Well, I think we'll continue as a country on our path of growth, which has been very steady in a world of great turmoil and more uncertainty than I've seen in the last 25 years. So I think that's a huge positive for India. And I think as someone from industry, and all of us from industry, I'm sure, feel very proud about it.
So can you speak a little about the 5G rollout? How is that proceeding?
5G rollout will begin soon.
Okay. So nothing else, sir?
I think we're talking about awards today, no business. So let's leave it at that.
Okay, sir. Any headwinds that you see impacting the Indian businesses and the industry, as in the oil prices we have seen as a concern? What are the other headwinds that you see as challenge to the Indian economy?
So I don't see oil prices as a headwind. I think that, commodity cyclicality has always been the case. And as Indian business, I think that we've learned to live with cyclicality, and Indian business is truly world-class and of world quality in every way. I wouldn't say that that's a major, that isn't a bend in the road, if I can say that.
So last question. The finance minister in USA has said that India will be pivotal in the value chain, global value chain. What do you have to think about it?
I think so. I think the China plus one theory is playing out in India's favor, very much so. That's a fact. A lot of people who are now wanting to be in India, invest in India, and in the India growth story.
All right, that is the word coming in from Kumar Mangalam Birla. But with that, here's another important story that we want to bring you. The Sun has set on the Emergency Credit Line Guarantee Scheme introduced at the start of the pandemic to help small and medium-scale businesses. So government sources tell us that the scheme, which ended on the 31st of March, saw disbursals worth nearly 3 lakh crore rupees. This is as against the total outlay of 5 lakh crores. The big takeaway, however, is that only 4% of the disbursals turned into NPAs, which the government says is a lot better than expected. So Sapna Das joins us with the entire ECLGS report card. Sapna.
As indicated by the finance minister in the last budget, the government has allowed the emergency credit line guarantee scheme with loans up to 5 lakh crore to sunset. End of March, total loans sanctioned under the scheme are close to 75% of the corpus. Guaranteed amount is around 73% of the total corpus at 3.65 lakh crore. Out of this, disbursements were close to 3 lakh crore, or 78% of the sanctioned amount and 80% of the guarantees. Total number of borrowers under the guarantee scheme stands at 1.19 crore. Out of this, over 80% borrowers avail the loan. In other words, close to 1 crore borrowers have taken disbursements under the ECLGS over the past almost 3 years. In terms of the number of guarantees, micro enterprises have been the core beneficiaries, with 88% of them availing the guarantees. 5% belong to the small-scale enterprises, only 2% from the medium-scale enterprises, and 5% of the borrowers belong to other businesses. The government's rationale to not give further extensions to the ECLGS are also clear. there is no COVID-related financial emergency still at play. Consequently, the demand for fresh funding under ECLGS has started tapering, especially after the Omicron wave last year. And particularly in the last few months, this trend has become more visible. Hence, despite a headroom of over 1 lakh crore worth of funding still available, the government decided otherwise. One of the key takeaways from the ECLGS are also the NPA numbers. For the first time, government data reveals that out of the total 3.65 lakh crore worth of guarantees given, only 4.38% or 16,000 crore worth of guarantees have turned bad till date. In terms of loan accounts, this is 18 lakhs or 15% out of the total 1 crore plus borrowers who have opted for the ECLGS. In the government's words, this is all pretty manageable.
All right, Sapna, thanks a lot for bringing us all of the details on the ECLGS report card and how it's really looked ever since the start of the pandemic. But with that, it is time for another short break on the show. When we come back, we're tracking all of the action from the world of commodities. Crude is back up above 85 once more. We'll tell you what's going on. Welcome back. You're still tuned into Power Breakfast. We've been talking all about the equity market, so let's talk about commodities as well now. Manisha joins us with an update. Manisha, crude is back above 85. There's so much going on. Take us through what's everything that's happening in the world of commodities.
Well, thank you for that, Pavitra. A lot on my plate right now. Yes, crude oil prices, I'll begin with that, and that one is trading at a one-month high. We've seen 2% of gains overnight. The global supplies are tight, and the markets do presume that China, with its weak data, could be coming out with more stimulus measures, and that should boost Chinese demand going forward. Markets also are looking at the gold prices holding above $2,000 per ounce, with markets factoring in a 71% probability now of a 25 basis point rate hike in the month of May. But all of that really depends on how we look at the US CPI data today. That comes in the evening, and ahead of that, the dollar index has seen a bit of a decline. That in turn also seems to be supporting commodities. But the major headlines in the agriculture commodities continues to be in case of raw sugar prices, which are now trading at near 11-year highs. The coffee price is also trading at a one-month high. So there's a lot of movement coming in for the commodities. But not just that, even in the cryptocurrencies, you have Bitcoin now trading at a 10-month high. It's holding above 30,000. And the overall crypto market capital now stands at 1.3 trillion. So we are looking at money coming back in various commodities and cryptos.
All right, some money coming back there. Manisha, thanks a lot for that quick update. With that, we're going to wind down on this edition of Power Breakfast with the news that most Asian markets are a little bit lower. SGX Nifty absolutely flat right now. Thanks for tuning in. Bazaar is up in 2.